Monthly market snapshot today. If you are a homeowner in the Temecula Murrieta Valley, you know all about the homeowners insurance challenges that we've been dealing with for at least a year now. Big premium increases, current owners not getting renewed, and insurers pulling out of California.
Warning, mayday, mayday!
If you are considering moving here, you need to know what's going on.
You don't need to know.
Yes, you really do need to know. As always, with my monthly market snapshot, we'll be going over the real estate sales stats towards the end of the video as well. Here we go. Hi, I'm Jessica with the Genung team and Real Broker. Thank you for supporting our channel where we make a new video every week telling you everything you need to know about buying and selling in the Murrieta Temecula Valley real estate market and what it's like to live here. There has been some good news in the real estate industry lately with the falling rates and the expectation that the Fed is going to start lowering the federal funds rate, and buyers are having an easier time with less competition from other buyers. The Fed decision is expected next week on Wednesday, September 18th. A lot of folks are happy to not only see the rate increases coming to an end, but now it looks like we're going to see the beginning of some rate cuts.
Congregation, I said, can I get an amen?
But there continue to be challenges in California with homeowners insurance. California is facing a deepening property insurance crisis, and one major insurer is set to raise rates by an average of 34%.
Move this man!
A homeowner's insurance video is on my long to-do list, but let me just tell you briefly what we've been dealing with. It has gotten quite bad over the past year or so. Many of the large insurance providers in California have been pulling out or putting a pause on writing new policies. For my clients purchasing homes here, this has meant fewer and fewer insurance companies that we are able to obtain insurance quotes from. And to make matters worse, many neighborhoods that were not previously considered high-risk fire zones have been reclassified as high fire risk, like my home, which raises rates and limits the options on insurance companies willing to write policies. Some neighborhoods that are considered very high fire risk zones have zero insurance companies willing to write a fire policy. When this happens, these homeowners have to turn to the insurer of last resort, which is the state of California Fair Plan. It's a state of California run plan and the premiums are very high. We do not like to hear when a property has to go Fair Plan because, as I mentioned, the rates are very high and there are other issues as well. Unfortunately, the Fair Plan scenario is happening more frequently as time goes on.
That's not what I wanted to hear.
According to my preferred insurance broker, she says the main perils California Fair Plan covers are fire, smoke damage, wind, and vandalism. Then you need to have a supplemental policy with a private carrier to ensure what the Fair Plan does not cover, such as water damage from like a pipe or a roof leak, theft of personal property, and liability coverage. Previously, I was seeing homeowners insurance quotes on typical tract homes in our area run from about $1,500 to $2,000 a year. Over the past year, these quotes are now more in the $2,000 to $2,500 range, and that is for not very high fire areas. For very high fire risk tract homes, I'm seeing quotes north of $3,000, and for custom homes on large properties in the high fire areas, that amount can vary very widely and can even go north of $10,000 a year. So that's what's going on now, but it seems like it's going to get even worse. Allstate gets okay from the state of California insurance regulators to raise home insurance rates 34% in wildfire areas. A lot of people are naturally upset by this news, but my personal opinion is that the state of California had to approve this rate increase. From what I've been told, the state of California during the COVID aftermath was not allowing the insurance companies to raise rates the way they would under normal market circumstances. So many companies decided because of this that it didn't pencil out to do business in California at all, or they had to reduce the business they were doing here. I think it was either California approves this rate increase or we would be losing yet another insurance company, making the problem even worse. This rate hike, by the way, is the biggest jump that we've seen in premiums for a major insurer in 3 years. 34% is the average increase, as you saw in the article headline. Some customers will face premium increases up to 650%, while others may see their rates drop by as much as 57%, according to company filings. Other top insurers that have been pulling back from California are State State Farm and Farmers Insurance, citing the escalating costs of wildfires and regulations that have capped rate hikes for decades. Allstate, which stopped issuing new homeowner policies in California in 2022, pointed to these growing financial risks when it first paused coverage. They say higher home values and repair costs coupled with more frequent severe weather led to higher payments to help customers recover, so we need to adjust rates to better reflect the cost of protecting our customers, Allstate spokesperson Michael Passman said in an emailed response to questions. I'm going to get a spec political or economical, whatever you want to call it, but this is an important example to note in my opinion, and it illustrates what can happen when the government tries to enact price controls, and there has been some recent talk of price controls being a solution to the inflation that we are all experiencing.
Senator, there's a problem at the essay contest.
Please, son, I'm very busy.
A little girl is losing faith in democracy.
Good Lord.
It can have unintended consequences like what we're seeing in the insurance industry, where companies just stop or reduce providing the goods and services, and now we have less insurance company competition. The same thing we have seen in the housing market. When you have less competition, which is our inventory in the housing market, prices can go up, and they can go up rapidly, as we have seen.
Exactly.
Moving on from economics, I have an awesome local insurance broker that has helped a lot of my clients find good coverage options. A lot of my clients already had in mind which insurance company they wanted to use. Maybe they've used State Farm for their previous home, or they have an auto insurance with AAA as an example. But most of my clients have not been able to get coverage with these larger companies for homeowners insurance, even if they are existing customers. Just a heads up. Feel free to reach out to me if you would like my insurance broker's contact information. And real quick, if you're finding this video helpful, we would really appreciate it if you would like and comment on the video, subscribe to the channel. It helps us out with the channel and helps get us in front of more people. Back to homeowners insurance. The Orange County Register has this handy map where you can put in your zip code and it will tell you how much Allstate is planning on raising premiums in your area. I put in my zip code, 92562, here in Murrieta, and it looks like the basic plan called Deluxe Plus will be going up 29%. Ouch.
This is the worst.
These increases are also likely going to drive up rental prices, I would assume. So sorry that this commentary in the beginning of the video has started out to be kind of a downer, but we like to make sure that you have all the information that you need, including the good, the bad, and sometimes the ugly. Let's move on to some market stats, which are not as depressing.
You know, I'm not gonna cry over it. I did that in the car on the way home.
The market stats this month, quite frankly, they are a little bit all over the place. As always, we're analyzing single family homes only for simplicity, like we do to keep it consistent month over month. But like I said, we've got a mixed bag with some cities up, some cities down, and I don't see any major trends, but I'll tell you city by city where things stand. So we're going to start with the median sales price in Menifee. Month over month, median sales price is down $32,000 or 5.2%. That's no surprise to me because it had bounced up the previous month in July. $620,000. So that's an all-time high for Menifee. So I'm not surprised to see it settle back down in August to $588,000. Year over year, the median sales price appreciation in Menifee is 3.6%. Moving on to Murrieta, you have a sales price gain. This is also not a huge surprise to me because Murrieta has kind of been lagging behind the other cities in gains. So I'm not surprised to see it pop this past month. Month over month, you've gained $27,000 in your median sales price in Murrieta. Year over year, you're up 5.8%, and that's in the range of these other cities as well. Median sales price in Temecula has our largest drop. That's also not a surprise because it had a huge pop the last month. It went up in July, the previous month before, to $835,000. So I'm not surprised to see it settle back down to $780,000. Even though it's a month over month decrease of $55,000, that's no surprise, and I'll expect it next month to settle in between those two numbers. Year over year, very similar to Murrieta, you've gained 5.4% in appreciation on the median sales price, or $40,000. Number of closed sales is mostly down, except for Menifee. We're going to start with Menifee. Menifee's closed sales are up month over month by 10 homes. And year over year, closed sales are up a lot, which we feel like we have this anemic sales volume right now, but Menifee is up year over year 27.3%, and that's the only city that's up month over month and year over year. So year over year, 36 more homes this August versus August 2023. Closed sales in Murrieta is down a little bit. It's down 15 homes, but that's 14.3%, so that's fairly substantial. Year over year closed sales are also down, so this is what we're feeling in the market. The anemic sales down 22.4%, or 26 homes year over year, so it definitely seems to be declining over last year. Temecula is also down 25 homes month over month, or 20%, and year over year it's down 17.4%, or 21 homes. So all the cities but Menifee seem to be declining in sales. Menifee going the opposite direction. Let's take a look at median days on market, starting with Menifee, and I will just ruin the surprise. There's really no news here. We're like up or down just a speck each city. So month over month, it is taking 1 fewer days to sell a home in Menifee, or 19 days. So Menifee has the most inventory. Those homes seem to sell the slowest because there's a lot more inventory, and then also the higher desirability typically of Murrieta and Temecula being closer to San Diego County and those commuters, and that's reflected in the price. So Menifee is taking 1 fewer day to sell, though. Year over year, it's taking exactly the same, 19 days to sell a home in Menifee, which is still super, super fast. Moving on to Murrieta, month over month, it's taking 1 more day to sell a home, and same exact story year over year, 1 more day to sell a home. So 12 days on market is still very quick. Sorry if you can hear my dog whining. She's in her cage. Why? So she's not tromping around during the video. Median days on market for Temecula has decreased by 2 days, only 10 days to sell a home month over month in Temecula, and it's the exact same story year over year as well. Moving on to active listings, as I mentioned, Menifee has the most inventory, so month over month. Current active listings in August was 323 listings, and that was up month over month, 14 homes, so inventory is increasing a little bit in Menifee. Year over year, 39 more listings in Menifee, or an increase of 13.7%. Moving on to Murrieta active listings, month over month, there is 4 more active listings, so it's fairly flat, but that is an increase of 1.5%. Year over year, you have an increase in 47 active listings, or 20.3%. So we do have more inventory year over year, even though we have less sales. So that's why I kind of feel like we're having less buyer competition right now. So it definitely feels a little easier for buyers, and I think that's because we've got the increased inventory. Moving on to Temecula, month over month, there are 5 fewer active listings, or 260 in August. Year over year, there's only 9. That's fairly flat, but that is an increase in active listings of 3.6%. New listings is a mixed bag throughout the 3 cities as well, where Menifee being the anomaly. So new listings are up in Menifee month over month by 10 homes, or 5.6%. And year over year, it's up 16.9%, or 27 homes. So again, inventory rising in Menifee. And then Murrieta and Temecula, we've got number of new listings falling. So month over month, we've had a pretty big decline in new listings. Which, by the way, is typical as we get into the later part of the summer. It definitely slows down, and then we see a little bump in the fall, and then it really drops off over the holidays in January and then February. And as we start heading into March, it starts to tick back up again. That's the normal seasonal trends. So month over month, we have a decrease in new listings of 24.0%. And then year over year, we have a decrease of 20 new listings, or 13.6%. And very similar story in Temecula, where month over month, you have a decrease in new listings of 34 homes, or 27.7%. And so that was month over month. I don't know if I specified that, but year over year, number of new listings in Temecula is down 20 homes, or 14%. 0.7%. So Menifee is our only anomaly where the inventory is ticking up, and Murrieta and Temecula are doing their normal seasonal slowdown. So it's going to be interesting to see what happens as we go into the fall, if we see some normal seasonality. Let us know what you think always in the comments. Thanks for watching. We'll see you next week. Bye.